Good morning, everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for July 7th, 2017. Well, my goodness. Yesterday the bears showed up in force and they were hungry and pushing the markets lower with a gap down and then a little bit of an intraday rally, which I think faked a lot of people into believing it was time to buy. Only to experience more sellers coming on toward the end of the day and selling off toward the close. Now, the diamonds here, if we were to, I'm going to actually remove this line just for a second. If we look at the diamonds, we could now potentially see the possibility of a double top high. This is clearly a rejection of a high with a follow through to the downside. Now the good part of this is it's holding this current price support. The diamonds is hanging on here. And if we were to look at the 50-day moving average, the 50-day moving average is somewhere down here. So we're still well above the 50-day moving average. But this could signal or be the early warning of a double top high. In fact, if you look closely enough, you'll see could also be a triple top high. So it's going to be really important that the diamonds hold this level right here. A failure through here would suggest that the market would probably go down and test. The diamonds could possibly test that 50-day moving average. Now it does have the 34 EMA on the chart that could stop it first. But that could be a possibility of drifting lower if that support breaks. Now, if we take a look at the SPY, the SPY gave it up yesterday. SPY, maintaining its downtrend here. Maintaining its downtrend and broke the longer-term support. Or the longer term trend of the SPY. And here again, we're resting right on a price support level that's going to be really important. We need to see this hold. If this fails, if we drift below here, then we're going to have some additional problems in the market. Now, we are clearly well below some important levels of resistance here. The SPY has got a lot of technical damage in it in the chart right now. So we'll have to watch this very, very closely. Any kind of a bounce in here could truly be setting up for more selling. Any rally could set up for additional selling. So be careful. Don't just think that a bounce or a relief rally is the reason to just start buying with both hands. It could be the reason to actually increase your level of caution and watch for a potential failure point. Now the SPY has also failed through the 50-day moving average. And that's pretty key. If we can get right back above it, not a big deal. We can find some support right there. If we rally back toward that 50-day moving average and show failure, then I would expect for new lows to be made in the SPY. Okay. If we look at the Qs just not healthy at all. If we notice this level right here, we're holding that level right now. And we kind of clung to it yesterday with our fingernails. Any bounce in here should be looked at as suspicious, or the potential that we could find new sellers to push this on through. If we break through this level, look where the next level of price support is. It is significantly lower, and right now the Qs are the big pressure on the market and could potentially lead us lower. So it's going to be really important that this holds right in here. If it doesn't, we're going to be in trouble. Now, notice that we have failed through the 50-day moving average. The 20-day moving average is getting ready to cross through the 50. The 34 has crossed through the 50. And so any rally back into here should be watched closely for the potential of a failure pattern. All right, blue ice failure. One of my favorite shorting patterns out there. And we could be setting that up here in the queues. So watch it carefully and be cautious. IWM really got thumped yesterday. And now we have, kind of the perfect bearish M double top pattern showing here on the IWM. And this resistance level has clearly proven to be strong. A failure through this support here is going to be a critical decision point for IWM. If we break down through here, we have, lots of levels down here that could be tested. Now, IWM, if we look at the 50-day moving average, actually closed below the 50-day moving average yesterday. We did catch a little bit of a bounce off of this support level here. Before the end of the day yesterday, did catch a little bit. That's hopeful that we could pop right back above. But we have to keep in mind that all this area right in here, this is all now heavy resistance. And any rally back into here could be a point of failure. Okay? So keep that in mind when you are watching this market going forward. We don't want to just race in. If buyers step in and a relief bounce occurs, that is not an indication of all clear. You should buy and buy, because we could run into some sellers very quickly, just without a big move back up. We could run into some sellers. So be careful. Now, there's one major caveat to this today. Today we have the employment situation number. That employment situation number is always highly focused on by the market. Now, normally what we're focused on is we're focused on the jobless numbers. What's the unemployment number? Well, last month the unemployment number came in at 4.3%. And that's considered to be full employment. And we're expecting the number today to come out with that number staying right at 4.3%. So if we're at full, kind of considered to be at full employment, then what do we focus on here in this number? Well, the number is going to be the average hourly earnings. And if we're going to get the economy to grow, we need to see wage growth. And wage growth has been lagging behind for years. It's been very, very slow to recover since 2008. We need to see those wages start to come up. Today, last month we showed a 2.5% increase in average hourly earnings. Today, the focus number is 2.6. Okay, so a number of 2.6 would be positive for the market. We currently are looking at futures that are just slightly bearish this morning, just ever so slightly bearish this morning on the futures. That could change very quickly as soon as that number comes out. Okay, if we get a number that's greater than 2.6, look for the market to respond positively to that. If we happen to surprise the market and we're at 2.5 or less, look for the bears. Look for the bears to really start pushing south. So I think this is our focus today, and it will be a key element in whether or not we're going to find a bounce off of these support levels or not. If we get that good number, we could see that bounce occur, that nice Friday relief rally come into play. If we don't get that number, if that number comes in weak, if it comes in below 2.5, could be a bad day for the market. So be careful here and watch that closely. So everyone have a great day. By the way, if this is the first time you're watching this information, please know that if you subscribe, click that subscribe button on YouTube or the follow button on Facebook. That way you'll get notified when I post this information, and I do post this information every single market day, and it's available to everyone. Now, I don't just do this out of the kindness of my heart necessarily. I do this personally for me. This kind of work, this kind of daily preparation is important to me, and I just happen to be willing to share it. So if this is something you're interested in, please feel free to subscribe. Everyone have a great day. Right Way Options, we will be normal time today, and I will talk to you all very soon. I wish you all great profits. Take care.